You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. There's just 4 days left to this glorious year of 2021. Where have we been? Where are we going? And what are we going to do about it? Well, our good friend Robert Kientz is with us now. You find Robert goldsilverpros.com. Robert, great to see you.
Good to speak to you again, Kerry.
Hey, so this has been an insane year. The past 2 years have been completely insane. Perhaps the global health issues are reaching a crescendo now. It appears that the latest variant, it isn't the bubonic plague, to say the least. So what are your thoughts? Where we've been these past year or two? Where do you think you are heading?
Well, I think, what we chatted about before the show was it seems like the limits have been removed in terms of like fiscal limits, budget limits, spending limits. The current administration is trying to get the Build Back Better plan approved. It got stopped.
The Build Back broke, I believe.
It got stopped by who else? A Democrat senator in the Senate who basically torpedoed at Manchin because he wanted them to actually go through the reconciliation process, actually know what they were spending their money on and be fiscally responsible. And they're revolting on their own now because of that. So I saw an article today in CNBC that they want Biden to just approve a bunch of executive orders to try to mimic a lot of those programs. Of course, you can't get all the money, but you can, do a lot of things. And they're desperately trying to push this forward. And it just seems as though, Kerry, there's no thought anymore for what the long-term consequences could be. The Fed has continued to have their quantitative easing policies dating back to the last recession, 2008, 2009. They finally announced that they would taper next year. I believe they're going to reduce or actually get rid of all of their purchases. They're going to $30 billion a month, I think, until the end of March. They're going to raise rates up to 0.9% by the end of the year. So they're actually going to contract not only their spending, but they're going to raise rates. And the question will be, how will that affect the economy? Last time they tried to raise rates substantially, we had that 20% stock market correction. So the government, though, has not stopped. They're continuing to spend. The central bank's on a little bit of a different path than them. It'll be interesting to see how they intersect this year with the government needing, more money and needing central bank to be more accommodative.
This reminds me of the lyrics of a Johnny Winter song. I don't know if you're a fan of his, great blues guitarist, song called Cheap Tequila. And the line that comes to mind is, drink up and be happy, live just for today, drown in cheap tequila and flush yourself away. It's right. We're in the cheap tequila economy here, doesn't it?
We are. And with prices rising as much as they are, that's a good segue. Everything's super expensive. You have to go to cheap tequila now. You can't afford the good stuff, or I've got a Jack Daniels.
You can't find it. You can't even find the good stuff. There's a shortage of high quality champagne, although not in the supermarket, but there is a shortage of bubbles around.
Yeah, everything's just gotten so expensive and people are curtailing, their purchases, their travel. And then, of course, you've got issues with the Omicron variant, but you also got issues of people walking out on their jobs, the great walkout.
That is amazing.
Yeah.
We've never seen anything like that, Rob, in our lifetimes. Like I grew up in a work ethic centered family. I didn't have a work ethic as a kid, but, once I grew up and I had my own bills and it was either pay them or go bankrupt, I became like a worker. Mm-hmm. And now, I read some statistic, and I don't believe it, that 4% of the U.S. Employment population quit to live off their crypto winnings. I just find that hard to believe. But I think that, in my generation, I'm a boomer. After the pandemic hit, a lot of you out there just said, screw it. What's the point of this? I'll collect Social Security. And and Medicare and whatever else. And I'll do side hustle, side gigs. I'll Uber. I met a guy is my age in Florida here. He was Ubering and made a couple extra bucks between his Social Security, his wife's. They were doing okay. So the work ethic is like, yeah, people are really deserting. And then you have younger people who just don't see the point of the rat race and can make enough money and not have a job, right?
Yeah, essentially we're becoming France, where people don't want to work or the government doesn't want you to work, so they give you a payout. And it's interesting, you mentioned Uber. The Uber driver that took me to the airport last week said, yeah, I used to be in financial services and I just quit. I said, I wanted to get out of that job so bad. He's like, because he's like, it's not giving me enough to retire. It's giving me a lot of stress. And he had a Tesla. The guy had a $90,000 Tesla. And he was like, it's awesome. I drive around my Tesla. It's $6 to recharge this thing every day. Yeah. And so basically most of the money he makes from Uber, he keeps, and he's got that and his investments to live off of and Social Security when he gets there. And I agree with you 100%. And the millennials, I kind of feel bad for them, Kerry, because the statistic that came out within the last couple of years is only 50% of them were finding jobs in their fields. So you go to college and you have a 50% shot of having a reasonable expectation of a decent income. The other 50%, we're working at Starbucks or we're doing something they didn't want to do and not making the money they wanted to make, all the while having very expensive school bills. So this is not an economy at which it promotes people wanting to work hard, unless you, like you said earlier, you're an entrepreneur. If you're an entrepreneur, there's still opportunities out there for you. I recently quit my full-time job because of the business school at Silver Pros has allowed me to do it. And we work very hard. I work
Congratulations.
I work 12 to 13 hour days but we get the job done and I'm able to do that. And that opportunity is out there. But if you don't want to work those 12-hour days, I guess, you're driving an Uber or working at Starbucks.
And there's nothing wrong with any of that.
No.
You do see some hardworking baristas, but you're not going to be paying your college loans. One of the biggest reasons to become a barista is for the medical care, the health insurance that Starbucks offers you as a Starbucks employee. And you are making above average wages, but so many jobs, Rob, that used to pay above average wages, like long haul truck drivers, used to, they were unionized, Teamsters, and they used to get, 50% over average income. It was a good paying job, might not have been the most desirable. People who worked as auto techs, they got paid more than the prevailing wage. But now they've clawed back those wages. And surprise, you can't find people who want to do it. So what's the solution? Hire robots, right?
I just did a recording for our subscribers on that exact topic this morning, Kerry. A lot of articles coming out about the automation, the robotization of our economy. And it's interesting, over my break last week, I was watching Netflix and there was a Russian series called Better Than Us. And it was basically about how robots were replacing humans. And they were advocating the robots were basically better, not only at what they do, but they were more moral. I mean, it had a very moral tone to it. So then I started watching the Human series on Netflix as well, or Amazon Prime, I forget which one. And it was the same thing, but from a British perspective. So obviously, the grooming and the advertisement for the robotic workforce is out there. They're wanting people to jump into this. And, the implications for that are, where does the income come from? Are we going to live off a universal basic income? Is the Fed going to, deposit money straight into our bank accounts? And if so, who's producing to make that happen?
Inflation is endemic at that point.
Yeah,
I think we'll become a nation of podcasters and YouTubers.
That's right.
We create such value, Rob, that the economy will sustain itself just on content creators. Or a close relative of mine who works for one of the major tech companies, they call them creators. That's what they call us on the big tech, creators. So you'll be a creator, and you'll, in places like Amsterdam, Netherlands, if you're an artist, they pay you like $15,000 a year to be an artist. And so you'll be paid to be a content creator.
Yeah, I guess that's the way it's going. TikTok, I heard, was the fastest growing platform in history and, outpaced a lot of the other ones put together. So I guess that's where everybody's going. content.
Content creation. That's the new industrialization. At least when you make stuff in a factory, there's actually a show for it. When you make a thing, you got an entry on YouTube or a website entry. It's totally ephemeral. Well, so ahead for 2022, let's assume that all the health issues end tomorrow. What do you see happening? And that's probably not going to happen. But honestly, with the newest variant, it could just end the whole thing. But let's assume everything went back to normal on January 1st.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, so let's assume everything goes back to normal. Most of the inflation and things that we're seeing were the result of not just restarting the economy. So yes, we restarted the economy. We had the base effect of immediate demand on the supply chain, immediate demand for goods, immediate demand for dollars. Okay, so yes, that did have an effect on inflation, putting stresses on the credit markets, increasing liquidity of the dollar, things like that for sure. But what we've seen commodity prices and inflation rise to highs. Commodity prices for dating back to the Great Recession, we've seen the producer price index was at a 39-year high recently. We've seen the CPI hit a 30-year high. So we've gone way beyond just where we were prior to the quote unquote pandemic. I'll put it in quotes. So essentially we were headed that way anyway. Yes, the pent-up demand, you could argue, from restarting the economy had an effect on it, but that wasn't going to last forever. And I think that's why the Fed kept using the term transitory. They didn't understand the structural implications of their monetary policy, dating back to 1913, but especially since 1971 when we came off the gold standard. And now that's coming home to roost, and the academics in the Fed either don't understand it or know that we're heading off the edge of the road here, and they can't do anything to stop it. So they're, what I call, it's like managing the Titanic as it sinks. You try to get as many people out as you can while the thing is sinking, but it's sinking. I think 2022, we're going to see double-digit official inflation. Certainly inflation by alternative standards like shadow stats is already well into the double digits, but officially you'll break 10%. The Fed is going to try to tighten. I think that's going to put incredible pressure on both the bond and the stock markets. And I think their policy is going to start to come home to roost, and they're going to try to manage it. I think that'll occur for a couple of years, and then eventually we will have the big crash. I think it'll start in the credit markets. I don't think it'll happen necessarily in 2022. I think there'll be a precursor, but I think by 2024, 2025, this current debt system we're in is going to collapse and reset. And that's, what I'm looking forward the next few years. But, mathematically speaking, you can't go on forever. You can't pump money forever because eventually you destroy the productive part of your economy, which is what we've been talking about on the show. And once you destroy that enough and you have too many people living off government benefits, the whole system collapses.
Yeah, I'm inclined to agree with you. I don't see any way around it, but it just fascinates me, the whole concept, because we're living in modern monetary theory land right now. I mean, that's what they're doing. And to think that it has no results, look, once they started with all the stimmies and everything, there was no question in anybody with any economic insight whatsoever, inflation was coming back with a bang. And you're probably not old enough to remember the 70s, but I do remember it well, the era of stagflation, where it looked like the dollar could collapse. And then Volcker, jacked the rates up to 20%. And inflation was subdued, and we carried on for 40 years. But we're not in a situation where any economy in the world can sustain 20% plus interest rates, and that might very well be what we need to subdue inflation and to bring real returns back into the debt market. Look, the whole inflation thing, I mentioned this a lot on the show, Rob. If John Williams is right and inflation is running at 14%, and you can take out a mortgage, 30-year fixed mortgage for 3%, that means that there's a negative 11% real rate of interest, which means you make 11%. If this goes on for 2 or 3 years, you paid for a third of your house in basically you paid for it in decreased purchasing power, right?
Yeah, that's exactly right. And what's going to happen to the banks in that scenario? It's not a good sign for the banking system. And I think from a central planner perspective, the central bank, the government's not going to stop running deficits. So they're going to run into an issue of a deflationary depression. Because what happens when you're maxed out on your credit card, the bonds, and you start having inflation, then it reduces your ability to meet obligations. It reduces GDP eventually. And what happens is you'll have deflation. The Fed will be scared of deflation, and they'll have to make a choice between the beginning of the debt collapse, the beginning of debt defaults, or printing more. And we saw what happened with the pandemic. When the pandemic came about and the shutdowns came about, and people weren't dying right and left. I mean, there was a spread of COVID-19, but it wasn't the Black Plague, like you said. When they shut it down, you saw what happened to the economy. So, and you saw the printing. They went from 4 trillion M1 to 20 trillion in a year. They're going to print. We know what they're going to do. They're going to print. And so what you're going to see going forward is you're going to see increased pressure on the ability to pay off this huge debt load. You're going to see reducing GDP. You're going to see inflation. And the only option that they're going to have is to continue to print. And I think that's here to stay. The only question really is how long does it go before it ends? And we don't know the exact date. We never know the exact date. But what you can do is do things to protect yourself in the meantime. Just be careful about your finances. Don't get into too much debt. Have good assets to protect yourself. That's really, the best that you can do. But I don't think we're going to avoid going over the cliff here.
No, I don't see. I think the time for that was a long time ago. And, the more you engage in bad behavior, the more reinforcing the cycle becomes a vicious cycle where you're constantly rewarding bad behavior and conversely punishing good behavior, like saving. To save anything now, not in a hard good, in some inflation protected medium, is just asking to lose all your money, right?
Yeah, because you're not going to get 11% in tips, right? You're not getting 11% in the 10-year or 2-year bond. So why would you put your money there? There's going to be a flight out of those assets. And we're already seeing it. We're seeing this massive bid up valuation of the stock market beyond, what we've seen in history. If you look at the PE10 or the cyclically adjusted PE ratio, which takes, rolling 10-year averages, so you can compare period to period, we're at the highest level since the tech crisis, but we're higher than the Great Depression. We're higher than the Great Recession. So stocks are overvalued, the second most in history, and we're about to equal very soon what happened in the tech crisis. And after you reach that level of the PE, it's called the fifth quintile. When you get, above 80% above mean or above regression, what happens is you have a crash. So we're at 80% now. One more percentage point, and it pretty much, when you look at history, says we're going to have the big crash. And you also have so that's rampant speculation. You got, price to earnings ratios beyond whatever is reasonable in history. And then you look at people speculating in Bitcoin. The reason Bitcoin is getting such a bid now is because people are chasing return. They're chasing getting the big one because they know they can't be on the 40-year plan. It doesn't work anymore, Kerry. The pension system is broken. The 401k system is broken. You're not going to get enough to retire. We know the baby boomers right now cannot retire. They're coming back to the workforce. And they're taking some of the jobs from millennials because they have to, because their 401ks aren't enough to retire with the current situation. Either they still have debt or they're seeing the high inflation, or the 401k never got to the level of a couple of 3 million that they needed to live off of, or they're trying to move them to fixed income and it's not enough interest to pay their bills. I mean, all of these reasons, low interest rate on bonds, they can't retire. And so people are moving into more speculative activities. And There are some winners in Bitcoin. There are some winners in the stock market, but most people aren't winning. And, that's what's being covered up. That's not the headline that you see on CNBC, but that's the truth. Most people aren't winning. And the question is, what do people do? What do they go to? What is your safe haven? How do you manage that risk?
Exactly. Could not agree with you more, Rob. Preaching to the converted here for sure. Rob, the best place to find you, connect with you on the web is goldsilverpros.com.
Goldsilverpros.com. We do have a Patreon membership for people who want to follow us there. We do content, economic analysis, mining stock reviews there. And you can also find us on YouTube and Twitter.
Excellent. Excellent. Well, there's a link to it in the show notes to this interview on Financial Survival Network. If you got a question for Rob, shoot me an email, kl@kerrylutz.com. Don't forget to sign up for your free newsletter. Rob, it's always great having you on. Hey, Happy New Year. Healthy to you and yours. And we will pick up next year and see where this thing is really heading.
All right. Thank you, Kerry, so much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.